This is Matt from InvestiQuant. Today is Wednesday, May 12, 2021. This morning, we saw the markets gap down within the prior session range, and since then, we have been trading mostly lower. So kind of trendy activity taking place in the S&P, which is that chart on the top left. But we have been pretty weak throughout the session. We've had sizable ranges taking place, sizable volume as well. We've already got 63 points of range in the S&P, so that is a very healthy range, and it has been on the downside today. And when we looked at the study this morning, we looked at a study that was based upon the prior session having the largest gap of the past 20 days, followed by opening within the prior session range. And when we looked at that, it had suggested that the bigger moves had historically been on the downside, and that was pretty consistent. Now, the win rates on them were not all that skewed in either direction. They had shown that the downside was a little bit more frequently taking place historically with that pattern, but it wasn't a super strong win rate on the downside. But what we're going to do this afternoon is, since we're seeing that pattern play out, we're just going to take that same pattern, update it with a little bit of post-open information, which is going to be that we're trading in the bottom 25% of the intraday range as of the time of entry, which I've got set to 3:15 p.m. Eastern time. And we're going to see what that has led to historically. So I've got half of this pattern built out already. I said that we opened in prior day range. That was from this morning. I'm adding right here that we closed in the bottom 25% of the intraday range. So we're still waiting to see if that's going to be confirmed or not, but we're currently trading down near the low. So this is currently true at the time of this recording, but the test will be based upon trading down there in the bottom 25% of the intraday range at 3:15 p.m. Eastern time. And then next, I'm going to add that price pattern that we used from this morning, which was the day after the largest down gap in 20 days, and then put us in a similar market environment where we are below a 10-day simple moving average, but above a 200-day simple moving average. Now I can click View Results. And here we go. These are the results based upon entering the market long at 3:15 p.m. Eastern time. When you open within the prior session range, the prior session was the largest down gap of the past 20 days, and it took place below a 10 and above a 200-day simple moving average. And then lastly, at 3:15 p.m. Eastern time, you are trading in the bottom 25% of the intraday range. So historically, only 21 samples here for the S&P. The NASDAQ has 22, the Dow 24, and the Russell 21. And if we look at the win rates on these, they are pretty mixed. So you've got the S&P with a win rate on these, which is saying what percentage have closed above that 3:15 p.m. price. Just 57%. So that one's just mildly favored. The NASDAQ is a little weak at 41%. The Dow, similar to the S&P, at 58%. And then the Russell is the weakest of the group at 24%. So we've got two of them, the S&P and the Dow, which are both slightly favored historically. And we've got two of them, the NASDAQ and the Russell, which have been weak historically with this pattern. If we look at the average win and average loss, the S&P is the only one that has a larger average win than the average loss. So the NASDAQ, Dow, and Russell, the bigger moves historically on average have been to the downside. So this pattern has been pretty mixed here historically, not nearly as clean as it was when we looked at it off the open, which just suggested historically all of them had bigger moves to the downside, and the win rates were a little bit skewed towards bearish moves for the day as well. So later in the afternoon, the bias does not show that same consensus that we saw this morning. It is more mixed. So hopefully you found that helpful. Good luck today, and we will see you next time.